Hello friends, welcome on the Groww YouTube channel. My name is Chintan Haria and I'm the head of products at ICICI Prudential Asset Management Company. It's always good to connect with all of you and thank you for taking the time out. The specific commodity which we are going to speak of today and the related investment avenues around it is one of the oldest investment avenues that humankind has known. Of course, no guesses, it is about gold, and I think it has been shining bright over the last 1 year or so. Why is that so, and what is the likely scenario for the next maybe near foreseeable future? I'll try and probably bring it on the table for all the investors and all of you. So if we see what has happened in the last 1 year, there's been a lot of turbulence in the financial markets. All of you have seen what has happened because of the pandemic. And as a translation to that, gold as a safe haven. Gold is considered to be a safe investment avenue when things look a bit shaky in the global world. And hence, people are moving towards gold as an investment avenue. Now, what is the general correlation and why? What makes gold move? Well, there are many factors, of course, but one of the factors which we feel over the last 10, 20, 30 years, which has mattered a lot in terms of the gold price movement, is effectively one, how much liquidity has been generated by central banks, and two, how much is the fear component or the volatility component in the world in terms of what's happening in the financial markets or the world economy. And when both these happen together, in terms of fear increasing, at the same time liquidity increasing, gold price tends to respond in a positive manner. Also, one more factor which as Indians it impacts gold price is of course the rupee depreciation. So if rupee moves from say 65 in 2018-19 to 75 in 2020, that also gets translated into higher rupee gold price. So from a investment avenue perspective, gold is treated as a safe haven investment, as a hedge against a lot of volatility in other asset classes, and also a way to participate in rupee depreciation for investors. So friends, what has happened in the last 30 years or so, in fact, whenever there's been a crisis, be it in 2008 because of the US housing crisis, which was known as the global financial crisis, be it in 2011 to 2013, wherein it was a specific emerging market, India, Turkey, etc. problem, wherein we saw the rupee depreciate from 50, 52 rupees to almost 69 rupees. Gold prices reflect the uptick because of the rupee depreciation. And also, I think since time immemorial, Indians specifically have been investing in gold as an asset class, which is considered as a safe haven, not just for ornaments, of course, but it also acts as a commodity which is used in bad times. And in fact, in India, there is a very large audience or very large pool of gold mortgage as well. So many people use their gold to mortgage in bad times. So in the uncertain times that we are in right now, I would believe that gold as an investment avenue is shaping up well for the investors. So how much should be your investment in gold and what is the thought process around it? I would say, friends, that first and foremost, the overall asset allocation matters a lot. How much you save, and as part of savings, where are you going to invest? Will it be equity, debt, and then some part in gold? Now, to each one of you, the percentage may differ, but it is generally said that having about 10% in gold may not be a bad thing to do, because it ultimately helps you hedge against the rising inflation, the falling rupee, as well as if something goes wrong in the financial markets. And it is also very, very liquid in terms of its pricing and transparent in terms of its pricing. So friends, what are the ways in which we can invest in gold? There are many options that you have. The easiest one is, of course, the gold, physical gold, but in the environment in which we are, the security of the physical gold can be a challenge. The next best alternative, and there are alternatives around financial gold, which is essentially the gold mutual funds or the gold funds in the mutual fund space. What do they do? How do gold mutual funds work? Essentially, the fund, of course, is the ICICI Prudential Gold Savings Fund of Fund. And just to highlight what does this fund do, it's very simple, that you have two choices when you buy gold, right? You go and buy physically, or you actually end up having a financial investment in gold. So the ICICI Prudential Gold Savings Fund takes money from you, invests in the gold ETF which we have, and that gold ETF in turn has essentially physical gold, which is LBMA approved and is stored in vaults. So the purity is taken care of because it is all certified and stored in a proper manner. And as and when you keep accumulating units based on your asset allocation, you will be able to accumulate wealth in gold. Uh, what is actually driving the gold prices? I'd probably take 30 seconds of your time on that. It's essentially three-pronged. One is rupee depreciation. Second is the uncertainty in the world, which is making people move towards gold and away from other financial assets. And the third thing is that gold for long has been the reserve of value. And as and when the money being printed or the money or liquidity available in the market is increasing, gold prices are following that. And if you on your asset allocation allows you to participate in gold, we would say the ICICI Prudential Gold Savings Fund becomes a good choice, a good fit in your portfolio, because you can sit at the comfort of your home in this pandemic environment time. It becomes difficult to step out, and more so, you can do it at the click of a button online. And second, with as low as 100 rupees to 500 to 1000 rupees, you are able to not just make lump sum investment, but also have regular investments or SIPs, as we call it. So I think the journey of savings is very important, but more important is putting that savings to use. And I think in terms of asset diversification, gold becomes an important asset class. And with the ICICI Prudential Gold Savings Fund, you can start your journey towards uh, having gold as an asset class in your overall portfolio, which over a period of time should generate wealth for you in line with the global gold prices. So, friends, when you're investing in the ICICI Prudential Gold Savings Fund, which is essentially the mutual fund wherein you're getting access to physical gold, the two good things which comes to my mind is one, that physical gold in terms of purity is certified, so you don't have to worry about the purity. And second is that if you speak about how low an investment you can make in that fund, you can start with as low as 100 rupees, and you can also do 100 rupees of SIP. Now, of course, how much you invest will depend on your overall allocation. So if it is 100 rupees allowed, if your savings today allow you only 100 rupees based on what you are investing, it's fine. But I think normal ticket sizes are between 500 to 1000 to 5000 rupees. So the idea is that through the journey of investing over a period of time, given that gold has rallied a lot in the last 1 year and it is difficult to predict gold prices going ahead, but if you have to build 5 to 10% of your portfolio over a period of time, the gold savings fund gives you an option to start investing in bits and pieces over a period of time through systematic investment route. And you can have an overall holistic portfolio wherein you have equity, debt, and gold. And I think over a period of time, through this asset allocation, your wealth will be created. Thank you for listening, and always appreciate your time. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.